Hi, this is Jack from Alpha Charts with the long view video. So this video is going to be focusing on weekly charts and longer, right? So weekly or greater charts. So before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may have positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you enjoy these videos, please like and subscribe. And if you happen to be on Twitter, go ahead and retweet. Thank you very much. All right. So again, this is the long view, right? So this is for the more of a position trader or for somebody who wants to be look at the market and see the forest through the trees, right? Sometimes we're so myopic with whether it's politics or whether it's coronavirus or stimulus checks or whatever the heck is going on, China tensions. We lose what's really going on in the market. And this video series is going to help try to reestablish that. So let's start with the SPX. And the blue line right now, just so you know, is the 40-week. It's the 40-week moving average, and that is this blue line. And, I think that's a reasonable long-term um, to establish trend, right? Indicator for trend. And so 40-week is about the 200-day moving average. So on the SPX, you see this was the 2000, 2007, right? And then this beautiful uptrend. And even though there's been dips along the way, prices back above a now rising again 200-day or 40-week moving average. So I think that's positive. So trend is still showing that it wants to be higher on the weekly. Now, as we zoom in, right, we have higher highs and higher lows. And so this, if we get up to this area, that would be an area that would be interesting to see what happens, how price reacts. Or if price happens to fall below this area, we'll call it 3,000. If price falls below 3,000, that also is interesting because now we'll be below a 200-day or 40-week moving average and make a lower low. So that would be a problem. But right now, we're not there. We are still making higher highs and higher lows with an uptrending 40-week. Looking at the Qs, going back real fast, and I just want to point this out too, that there is there's a pretty good divergence that is showing up here, right? It's not quite a divergence yet, but you see we're not getting to overbought. We're staying in this middle range right here. That is probably the biggest concern around. We're not getting into that 60, 70, 80 range like we have in the past. So that could be an issue. And actually, get rid of that. Looking at the Qs, this divergence is actually pronounced here, right? We can say there's a divergence there, right? As price is going higher, momentum is declining. Something to keep an eye on, but not every divergence matters, right? Here's a divergence right here, right? And we went higher, right? Divergence here, right? And we went lower, right? So again, divergence, look at this, divergence here, right? And we continued higher. So not every divergence matters, right? Divergence, I mean, I could do this all day, right? Finding divergences. And sometimes they go higher and they just are in a bullish range. And sometimes they matter like here, and you get a very steep pullback, okay? So right now there is a divergence, a momentum divergence on the Nasdaq. That could be due to rotation, and we're going to talk about that a little bit more later, or it could be due to something more sinister in the market. But the 200-day or 40-week is moving higher, and I really do think this 234, 235 level, which was the prior high, is the one that needs to hold. I mean, if this price comes back and tests it and it moves higher, right as the 40-week is catching up, that would be normal price action. So anyway, I just want to show the divergence. It is there. It is happening. It does not mean that we have to go lower, though. Again, everything here are weekly charts. Moving on, let's look at the IWM, right? Double top, breakdown, came back. Now we have a declining to trying to flatten 40-week and price above this important area, right? It was important all the way. I mean, I could pull this back, right? Yeah, something like that, right? So this area is very, very important. And right now, as long as price stays above, 144-ish, I think it's bullish for IWM and probably bullish for the markets overall. We're not, we're above it right now. So let's see what happens. That's kind of like just hanging on. That's small caps, and Dow Jones looks almost exactly like it, except for one major difference. The small caps were above this area, right? And IWM is below. So that's kind of interesting, right? IWM is kind of bumping its head here. And so, could this be some kind of complex topping pattern? It could be, right? I mean, I could easily put something like this in, and so I pull the right tool up, right? And I can, boom, right? Something like that, and say, okay, this looks like a toppy type pattern, right? Something like that. Sure, it's possible. Maybe some kind of head and shoulders top. That's a possibility. But just as much of a possibility is for price to break back above it. You got the 40-week declining here in the Dow Jones. So it is what it is. But you can definitely make the argument this is a complex top taking years to develop. And if you think about it, that would make sense in some aspects because any of these moves took years. I mean, this top right here wasn't really top, but this rounding area, started in 98 and finished in 03. So yeah, there you go. And then this, top right here, even if you say, okay, started kind of in this area right here, 06 and finished in 09. That was 3 years, right? So, 2017, 2018, some kind of toppy pattern 2021, that could make sense. So again, just one of those things that I'm looking at. Is this some kind of complex top that's gonna be forming? And we'll find out pretty soon, right? We'll see if price starts getting rejected, in this area. Does it get above 9,000 or does it stay below 9,000? We're gonna find out. So I-100 I like to look at, and that's more of a these are the mega caps of the world, right? The I-100, iShares Trust Global 100 ETF, right? That's the biggest of the big, right? Mega caps. And so we had resistance broke through, became support, and now we're making potentially a lower high here. 40-week is moving up. That's a positive. I think that we would love to see this get above $56, $57, $56.75, we'll call it. Price above that, and now we have a higher high, and everything is still good. We break below 51.25, and we got problems because we'll be below a 200-day 40-week, and we'll be making a lower low. Right now, it is showing a lower high, so that's interesting. Value line geometric index, again, a measure of breadth. Going back all the way to 98, you can see that this area, call it the 500 to 515 area, was major resistance. This area was resistance here, support here. We got breakout, fell back below all that real quick, right? They sold literally everything. And now we're trying to make higher highs and higher lows again. The 40-week is moving down. So for as a breadth indicator, it still shows declining breadth. If pricing get above the 200-day 40-week and make a higher high, and this can start to flatten, that changes things. But so, again, long-term view, breadth kind of is still declining. Mega caps are still kind of, running the show. The Amazons, Microsoft, Amazon, Google, Apple, Facebook, all those guys. Nestle, looking at the world stage. So that's that. And let's look at credit spreads, right? Because credit spreads should tell us when problems are occurring, right? Let's go back. Here we go. 2008, problems are occurring, right? Let's go back. 2011, problems are occurring, right? It's a big spike right there. Let's go back. You know what? 2015, 2016, right? Problems are occurring, right? 2020, problems are occurring. But now we're getting lower highs and lower lows. So spreads are coming back in, and it looks more like this situation coming out of 09, coming out of 2016, than it does these more concerning situations. So I think that's definitely a positive. If we, again, I want to see credit spreads take out this 157, this low, whatever that is, right here. I want to see credit spreads take that out on the weekly closing, because right now credit spreads technically are still rising, as the 40-week is showing. Now, if we get a spike back up and make a higher high, that's a problem, right? We have big issues at that point. If we can make a lower high or a lower low, this downtrend would continue. And I would say we're more as in a 09 situation than we are in a 2007, 2008 situation. So credit spreads right now, reeling in, I think that's a positive, right? Coming back down. Again, I do want to see them take out this low right here and continue that lower high and lower low pattern. Let's go get the VIX, right? How volatile are things out there? So on the weekly chart, the VIX is coming in, but it's still elevated. We're still above 24.5, 25, right? 25.8. And the 40-week is still rising. So like credit spreads, yes, it's coming in, but it's not in that all clear situation yet. So that's the part that gives me a little hesitation. Things aren't bad, right? They're not bad, but they're not all clear either. So, throw that in with the divergences that you're seeing, and the bears, they may have a case, right? The bears may have a case. Price is not confirming that though, and only price pays, as Brian Shannon always says. So there's the dichotomy of the market. What's it really telling us? Let's keep moving forward. Maybe we can keep with this theme. Lumber, right? So lumber, this area has been very important in the past, broke down, and now it is extremely strong. So the housing market, look at XHB, it's real fast. Look at housing, man. Here was a 2006 highs in housing. And look, we're above those highs now. And we're just a sniff from all-time highs in housing. Now, has it run far? Yeah, it's up 100% or almost 100% from the bottom. So housing has ran a long, long way. So whatever pullback, it may need a breather. What do I know? But if it can stay above these 2006 highs right here, if it can stay above, we'll call it $45, $46, I mean, that's got to be a major positive for the market and the economy as a whole. So that's kind of what I'm watching in as XHB. And looking at wood, you see the demand for wood is just skyrocketing. Higher highs, higher lows, ratcheting up. 40-week is starting to flatten out. Again, that is going to be a major indicator, I think, for the market as always. And look at this. You have a shoulder. Maybe this is some kind of head. Maybe wood continue rises, pulls back, can make a right shoulder, and you have an inverse head and shoulder, and then we scream higher. And again, I can't say how important lumber is to the economy as a whole. And this indicator's been, pretty good, overall. So that's lumber. Looking at financials, do you like financials? Here's your 07 highs, right? Tested it. And man, they are just weak, right? I mean, the Earth's getting higher highs, and higher lows. So if we get above 26 and a quarter-ish, that would be very positive. And if this 40-week can start to at least flatten out, man, it's still in a downtrend, right, on the weekly chart. So it's hard to get too excited about financials with a downtrend in place. Again, price gets above 26 and a quarter. I think that's a huge positive. But financials are still need some work. Still need some work. Whereas if you look at semiconductors, they're breaking out to all-time highs. They're a beautiful thing, right? Okay, there's 2000 highs right here, right? And semiconductors breaking out to just about all-time highs. Now, the bears will be like, hey, but look at this. You're seeing this huge divergence that as it keeps coming higher is happening. So is this a technology issue that's happening in the market? Maybe, we're seeing the Qs with the divergence, right? And SMH with the divergence. Let's go back to the Qs. I did that too fast. There's the Qs. This was the 2000 high. Boom. There's your beautiful uptrend. There's your divergence right here. Again, divergence right there, right? There's a divergence here, which really didn't amount to much until you got like way past it. So is SMH saying, hey, we're rotating out of growth and maybe going to rotate into, who knows, maybe financials or maybe, healthcare. Healthcare is looking pretty darn good. Had this, inverse head and shoulders. Now it's a little bit of a retest. But again, divergence right there. So we don't know exactly what it's saying yet, but I think that there is something to this. Are we in a bullish range? Yeah. So this could move sideways, right? This could move sideways and get rid of this divergence and then come back up into this area. So just because there's a divergence does not mean the market has to go lower. It could move sideways. Put a call ratio. Let's look at sentiment. So here we go. Market's never going down. Market's never going up. This is less of a signal. I think this is more of a signal, right? So, we got here in December 2018, and really in the end, we've been in this bullish range. Some people call it frothiness in here, but remember, things can stay frothy for a reasonably good amount of time. And so we're not here. We're not in this range right here, right? This would be a little bit more, bear territory. So right now, put call ratio, we're still in this frothy area, but we'll see how this plays out over the next few weeks. A big spike down here that would get me, actually very bullish if I could get one of these types of spikes. That would be a very bullish scenario. That means everyone ran to the one side of the ship, right? And if that's happening, chances are there's a couple bad weeks in the market for sentiment to shift like this. So again, just something I'm watching, but we are not seeing it yet. Nothing like that yet. Frothiness, and these quick little pullbacks, froth, quick pullback, froth. It's keeping the bull market going. Okay, so let's look at silver. Silver on the weekly chart and literally going straight up. Straight up silver. So obviously not sustainable. So what would we like to see? A pullback to 19 or even 20, and then a move higher, right? To get involved, because where does it come from? Where it has the potential to go? Looking from, it's gone up 82% from the bottom. That's huge, right? 82%. And even from when this move started, we'll call it there, right? It's up 27, 28% from here, right? Which is June 15th. So just over a month. So silver straight up. Okay, usually silver in an environment that is a risk-on environment, silver technically usually isn't the one that's screaming higher. It's growth, right? Look at gold. Here's gold. This was the 2011 highs, right? maybe an inverse head and shoulders forming. Again, gold's going straight up right into resistance, right? So a pullback potentially to this 150, even 155 level, and then a breakout would be like the most bullish situation for gold I could think of. But if gold is screaming higher and silver is screaming higher, what type of environment are we in? Is that a risk on or risk off environment? And I would say that it's normally with gold moving higher. Here's 2008, right? It's 2009. It's usually a risk off environment. So are we forming, again, long-term? I mean, this is a 10-year, 9-year base right here that's forming. And listen, this right here, from here to here, 2011 to 2012, right? So this was a full year. So it could take a whole year for this shoulder to come into effect. Could take 3 months. We have an election in November. We'll see, how that turns out. But watch for the pullback, and then maybe a cheat entry for this amazing base in gold. It's looking pretty interesting. So let's look at again another risk off asset, right? Here's TLT, 20-year bonds, trying to get to all-time high. This looks very much like some kind of consolidation, and it wants higher. So TLT looks like it wants higher. Again, that's mostly a risk off asset. Let's look at GLD relative to SPX. Let's try again. GLD relative to SPX. Gold relative to the S&P 500. Inverse head and shoulder may be forming. There's this other piece, right there. So here's the neckline. If we see a rounding out here and back up to this top, what kind of environment are we in when gold is outperforming S&P? Actually, I haven't even looked at gold QQQ. This is a brand new chart. Let's take a look here. Okay, here's gold and here, versus the Qs. And what are we seeing? Let's put an RSI in there, dude, just to see. Look at this. So we are having a bullish momentum, and this is kind of just moving sideways. All right. To me, this says that maybe things are changing, right? Keep our eyes open. Let's look for both sides of the tape, right? Bull and the bear side. And what's the market telling us, right? Gold putting in a bullish momentum divergence versus the Qs. Gold out, putting in a bottoming pattern versus the SPX. Again, on the weekly charts, this is this could be a big deal. This could be a changing of the guard. We've had a decade of really growth doing pretty well. Well, this could be something different, right? Let's keep looking, right? Let's look at the silver gold ratio, right? Because silver outperforming gold would be something that would be a risk off environment. That would be the metals, especially the precious metals, would be going crazy. And this downtrend is a 10-year downtrend, right? Or 8-year downtrend, really from here, 10 years. And look, this line is starting to get broken, right? This downtrend line looked broken, which also is in the same spot as the low in 08, right? And the low in 2016. Those became support, and then they became resistance, and now we're back there. The silver gold ratio breaking out above this area, silver outperforming gold, that's an environment that I'm not sure if growth stocks are the place to be. At least in the short to intermediate term. We'll see. Let's look at the miners. Here's the gold miners. People from March are piling in the gold miners. And unfortunately, this I was in a bunch of them. And this shakeout right here shook me out a bunch of them. And so I don't own any right now. But but let's look at them. This was one of my favorites, Pan American Silver. Now we're coming back to a high, right? Here we go. Let me do this, right? here's the, here's this high right here. So we're coming back into it. So is it a good risk reward right now? Nope. You should have been in it from back here. But, shoulder, head, maybe some type of shoulder on this side. I mean, Pan American Silver, keep your eyes on this one, right? SSRM, SSR Mining, look at this big, I've been watching this one for years. It finally broke out. Again, I did get shaken out in this pullback right there. That was my bad, but it is just going higher. Would love to see some kind of, pullback to maybe get involved with this one again. Eldorado Gold, right? This was an important area, breaking out, right? AU, screaming higher, right? Again, these are all gold miners and silver miners, right? Sandstorm Gold, moving much higher, right? Look at that. It's going from a $3 or $4 stock to almost $10. Huge, right? Sandstorm, and we in precious metals, right? Silver mine, look at that, breaking out all-time highs, right? That's just huge. So again, would love to see that retest to get involved. So what is the market telling us on the big picture? As of right now, is saying, I think that there's caution to be had in the air, right? Price has not confirmed anything yet. There's been some volatility the last couple of weeks. It is showing a divergence. You're seeing silver and gold really start to outperform. Gold miners have been doing unbelievably good, but the market has not capitulated yet, has not really changed yet, and nothing has. And there's levels to be reckoned with, right? And on the Qs, this prior high, this 234, 235 level, that there's a level to be reckoned with right there, right? Once that happens, then you have moving averages, and you'll have other levels that will end up being important if it does decide to go back down. But as of right now, this is a market that, according to 200-day, is still an uptrend, and whatever pullback could be shallow, could be deep, don't know, but there are caution signs out there. So I would say stay safe out there, know your risk, know your time frame too, right? Because a lot of stuff we're looking at, again, this is the long view, right? So this is weeks and weeks of data, right? Years of data really out there. Also, if we look at volume on the Nasdaq real quick, there's some volume that may show some distribution type weeks along here too, right? So again, doesn't mean the whole market as a whole is going down. It just means that growth may not be the place in the near to intermediate future that it once was. We're seeing a lot of, we'll call it cracks. It hasn't broken yet, a lot of cracks in it. Again, we'll do this again next week. Next week is going to be great because it'll be monthly charts. And so we're going to do a whole lot of monthly charts and look at market structure from space, basically. And it's going to be great. So hope you all got some value out of this. Hope you all have a great rest of your Sunday. Again, today is July 26th. And good luck this week. Take care.